Hello everyone, welcome to my YouTube channel. This is the recording for skills at the rate 100 where for 100 days we are bringing for you 100 different speakers from all over the country. The speaker is CA Manish Agarwal, who is an AIR 40 in CA finals and also a Joe Stock speaker. We have learned about tax dispute and compliances in charitable entities. The link to connect with the speaker is in the description of this video. Also, this video is sponsored by Soulful Success Academy by Komal Botra, who is a passionate life and mindset coach. She has trained over 500 plus professionals and individuals who help achieve their full potential. More of them in the link in the description. So now, what are we waiting for? Let's go.
Hello everyone, good evening. And today we are in for a very special session. It is the 34th session for Skills at the Rate 100, where for 100 days we are trying to bring for you 100 different speakers. And today's speaker is very, very special. Amongst other things that I'm going to say, the biggest thing that really is amazing that they have accepted our invitation for speaking is that they are a Joe Stock speaker. So also a rank holder in CA final. So amongst that, other things are that he's CM Manish Agarwal is practicing in Jamshedpur, Jharkhand, and Kolkata, and also he has a vast experience of 6 years in ENY, where he has done the corporate tax and FEMA services, and presently they are doing corporate taxation and mainly into this trust litigation and everything. So Manishji, thank you so much for accepting our invitation. Uh, we are very excited for the session. Thank you. Over to you.
Thank you, Lokeshji, for the introduction. Uh, Before I start in, couple of things. Since I will be taking on the topic of trust and NGO litigation and everything, anyone has any doubt, I will request you just give me a thumbs up, so I will be able to understand कि आप लोग you are there in the session, and that could be have a better two-way communication. Before I start in, मैं कुछ बताना चाहूँगा कि why a journey about myself, just in 1 minute. So I qualified my C in May 2018 with All India rank 40. Post qualification, I went to EY Bangalore. I was into corporate tax and FEMA. Then I took a transfer to EY Calcutta. So I was in EY for around 6 years into corporate tax and FEMA. So in the last 2 years, I left EY in December 24. Uh, in the last 2 years of my life at EY, I'm just giving a brief background like why I took I decided to make a career in trust and angel taxation. So 2 years before I left EY, so we had got a very good income tax due diligence work for around 20 trusts of the same group. So the same group had around 20 trusts, and our EY was given the work to have an income tax due diligence to see from income tax perspective whether all the 20 trusts were compliant or not. I was the manager of the team, the engagement manager, and everything responsibility, that responsibility was entrusted on me. So the last 2 years, almost you can say almost 2 years, I have spent my life reading, understanding the issues, litigation, the compliances that circle around a trust or NGO. Before I start with the technical part, one thing which everyone would agree, I assume people who are there in the session are mostly chartered accountants, practicing chartered accountants, or CA students. So one thing which everyone would agree with me is in a practice, we don't have much area, we don't practice much in trust and NGOs. Two reasons are there. First reason is the main issue is the technicalities and the complexities. A trust and an NGO, there is a particular chapter in the Income Tax Act which governs the taxation. There are hardly 8 to 10 sections, but that 8 to 10 sections are so complex, so technical, and so confusing, I would rather say, that people don't generally go and practice in this particular area. First reason. Second reason, the amount of fees that you get when you work for a trust or an NGO. Okay, so this is the two reason why I have generally seen people don't practice in this particular area, but given my expertise from EY, thanks to EY that we had got good amount of exposure. I got good amount of exposure from EY when I was working for that particular 20 trust. Because of that, when I decided to start my practice from January 25, my more, I can say my core area is your trust and NGOs. So without wasting much time, I'll start with a very basic. So in the topic, in the 1 hour that we are having a discussion today on a Sunday night, My main focus would be on the litigation part of the trust and NGOs. The most important, or you can say the most frequent queries or the issue because of which a trust is, you can say, gets a notice from the income tax department, or gets a notice, or you can say because of which appeal is required to be filed before the appellate authorities. Before starting in the litigation part, I will just spend 10 minutes on the basic of your taxation of a trust and NGO. Before I start in, anyone any doubt as of now, or should I proceed? Anyone any, or should I proceed? I request if I can get a thumbs up, or I shall proceed. Anyone any doubt, or should I proceed?
I think no doubts are till now. Please proceed.
Okay. So, hope my screen is visible.
Yes.
Yeah. So before by starting in the trust, so trust, if I talk about the model of a trust, it has basically four parties. One is the author or the settler who forms a trust. Then is your trustee who manages the trust. Then the beneficiaries for the benefit of whom the trust is formed. So basically, it has author or the settler, the person forming the trust, the trustee who will administer the trust, and the beneficiary is the person whose benefit the trust is being formed. Okay. Then there are few in Indian statutes which governs your trust. The central act is your Indian Trust Act 1882, and many states have the specific acts. Like if I talk about Bombay, see they have Bombay Public Trust Act 1950. If I talk about your Madras, then again Gujarat, there are few states which they have their own trust or a societies act which governs the charitable entities. A trust or a public entity can be divided into two parts. There could be a public trust or a private trust. If I talk about a public trust, they are basically those trusts who are formed for the benefit of the trust, for the public, for the general public. A simple charitable entity or NGO, non-government organization. If I talk about private trust, they are basically your family trust, which are formed not because of doing some charity, but for the purpose of holding the assets. Again, if I talk about, so again, since it is a very basic of the trust, so I will be a bit fast. When I will come to the litigation part, I will be a bit slow. There are three types of entities that can be formed for the purpose of doing charity in India. The first one is the trust, which I think, the most common form. The second is the societies, and the third is your Section 8 companies of companies at 2013. Okay, so if I come to your Income Tax Act, so Income tax has specifically defined what do you mean by a charity or what do you mean by charitable. The same is contained in section 2 subsection 15 of your Income Tax Act 1961. So as per that particular section, charity or a charitable activity includes your relief of poor, education, yoga, medical relief, prevention of environment and monuments, and advancement of other general public utility. In short, we call it GPU, general public utility. So these are broadly seven limbs under which you can fall. If I talk about the first six limbs, that is the relief of poor, education, yoga, medical relief, preservation of environment, and monuments. These are six specific limbs. If you fall under that limbs, that is perfect. But you are doing any activity which is not coming under this specific limb, you will fall under general public utility. For example, simple example, if I can give you, promotion of sports. So if there is an entity, a charitable entity, which is formed for the purpose of promotion of, let's say the example, basketball, or let's say the example, tennis, badminton, in a particular city, in a particular state, this is a particular six limbs which will they not fall under, but they will fall under GPU. Okay. One condition under GPU, which is the last limb, there is a proviso which is very important. A proviso which states that if you are doing any charity and falling under general public utility, you cannot do any business or a trade. If you are doing any business or trade, there is a condition that that should be incidental to your main object, and the total receipt from that commercial activity should not increase or should not exceed 20% of the total receipt. I'll give you an example to make it more understandable. There's a eye hospital. Let's say the example XYZ eye hospital. Okay, they are providing, you can say, subsidized rate of services to the eye patients. In that eye hospital, they have, you can say, set up a pharmacy, or you can say, set up a eye center, or given a particular property on rent to a eye, you can say Titan Eye Plus, who is, you can say, selling your specs. So the Titan Eye Plus selling the specs, it is a commercial activity, okay? And that particular entity, the eye hospital, is earning rental income from that Titan Eye Plus. It has given a premises on rent to Titan Eye Plus. Okay, so this rental income that is coming from Titan Eye Plus, it is something commercial in nature. Okay, which is per se, if you see, it is not commercial, but as a whole picture, if you see, eye hospital has the main object of providing medical relief to the patients. Okay, if this particular rental income which is coming from your Titan Eye Plus, okay, this particular activity is something you can say it is incidental to the main object of providing eye treatment to the patients. Sorry. So this particular, if the total receipt is within 20%, there is no issue, no harm from income tax perspective if the total rental that is earned from Titan Eye Plus. If the total rental income being earned from Titan Eye Plus exceeds 20% of the entire receipt of that particular eye hospital, then it will be, you can say, attract penal sections of your income tax act, and you are liable to pay taxes on that commercial activities as well. Yeah, so if I talk about, so this was a brief about your section 215, what your section 215 states about for your charitable entities. Then I'll come to section 11. So if I talk about your income tax act, there are few sections which covered your chapter of your trust, section 215, which covers your what do you mean by charity. Then the section 1023C, which covers your provide exemption to the trust or your charitable entities, but that is very narrow in scope. Presently, from 1st October 2024, that has been scrapped down. So we have section 11, 12, 13, which covers another. So basically, there are two, you can say, two limbs, two particular areas wherein you can take exemption. One is 1023C, another is section 11, 12. Okay, 1023C is very narrow, mostly providing benefit to your education entities. Section 11, 12 is wider. 1st October 2024, amendment has been brought in, wherein all the entities who are covered under 1023C are asked to merge to 11 and 12. Okay. As of now, if an entity wants to get registered under 1023C, that is not possible. They have to get registered under section 11 and 12. If I talk about section 11, which provides your exemption to your charitable entities, it says any income which a trust earns. If I talk about a trust, the nature of receipt, the major nature of receipt will be a donation. Okay. So a donation, a voluntary donation, if a trust is earning, that is exempt, subject to the condition they are using that donation for the purpose of which the trust has been formed. For example, if I talk about welfare of animals, let's say the example. So if a trust has been formed for the purpose of welfare of animals, and in a particular financial year they have received 1 CR voluntary donation, so 85% of that particular voluntary donation they have to spend for the welfare of animals. If that is done, the 15% is exempt from taxation. Okay. Then comes your corpus donation. Corpus donation is not taxable, is not considered as an income. Okay, subject to the condition that you are uh, investing that particular corpus donation in a specific modes which is prescribed in your income tax act, that is prescribed under section 11 subsection 5. Okay. For example, simpler form could be doing FD. If you have received 10 lakh rupees corpus donation during a particular year, that is not considered as an income, subject to the condition that you are investing in FDs or any other mode prescribed under section 11 subsection 5. There are few conditions for which you can claim a deduction or can you claim an exemption in section 11, 12. One of the major condition is that the object must be charitable. Okay. So as the topic says or the name says charitable entities. Okay, so your object should be charitable. And what we mean by charitable, as we discussed in section 2, subsection 5. Okay, if you are doing any commercial activities under the garb of saying charity, that is something which is not allowed. and you are subject to pay taxes on that. But if you are doing any charity and fulfilling the condition that you are applying 85% of the income, then that is come under your charity definition and you can claim the exemption for that 15%. Second condition is your registration. So if you are a entity doing some charity, you have to take registration, you have to take approvals from the income tax department under section 12 subsection A. Okay. Initially, from 1st of April 2021, changes have been brought in wherein you will get a provisional registration for 3 years, and after provisional you will get a you have to renew your registration for 5 years. And now every 5 years or 10 years, as the case may be, you have to apply for re-registration. Then component of income, the income from which you are earning, the source of income, that should be from a charitable activity, that should not be a commercial activity. Let's say the example, you have formed a you have a space and you are giving that space on commercial basis to corporates for meetings. Okay, you are earning 1 CR from that rental income from that commercial property, and out of that 1 CR, 85%, 85 lakh you have spent for charitable entity. Let's take the example that 85% you have spent blankets to the poor people. Okay, and now you are saying that 85% I spent for the blankets, 15% is my income which is exempt. So that is something which is not allowed, because the income, rental income from a place which is given for commercial purpose, this is not charitable. You are not doing a charity by giving a particular space for corporate meetings, right? Irrespective of the fact, the income you are earning from that you are using for charity. Technically, this is known as feeding the charity. Income you earn from a commercial activities, but you are using that particular income for feeding the charity. This is something which is not allowed. This was something allowed before 2022. There was a judgment of Honorable Supreme Court in the case of uh, New Noble Education Institute. After that judgment, feeding the charity concept has been done away with. Before that, if you're earning a rental income or any income from commercial purpose and using for the charity, that was considered as fulfilling the condition of section 11 and 12. But post the judgment of Supreme Court, that is something which is not allowed. Coming to application of income, the fourth condition, you have to apply for the purpose of charity, as we discussed in the last slide. One important compliance form, or you can say compliance, which is required to be done for the part of charitable entities. Let's say the example, a trust has received a donation of 1 CR. Take the example of a school received a donation of 1 CR in particular financial year, and they said that they have will spend that 1 CR. Or let's say the example, they will out of that 1 CR, they have spent 60 lakh rupees. They had to spend 85 lakhs, but 25 lakh is a shortfall, and they are saying that they will use the 25 lakh for building a new block for the school, which is a capital expenditure and will take, you can say, 2 or 3 years for building that particular new block. So in that particular financial year, there is a shortfall of 85%. Income tax that provides that you, if that is a shortfall, you can file a form 9A or form 10, wherein you are saying that that 25% you are accumulating and setting apart for the use in future years. Okay, so there is a form 9A, there is a form 10, which provides that if you have not spent 85%, there is a shortfall of 85%, the differential amount you can accumulate and set apart, and you can use in the future years up to 5 years in case of form 10, and in case of form 9A, the year in which you have received the income. And in that particular 5 years, or in case of 9A, in the year in which you have received the income, you have to spend that amount. If you're not spending the amount, that becomes taxable. Okay, so this form 9A, form 10, this is very important for my today's discussion, because a lot of litigation circles around this form 9A, form 10. Coming to specified modes 11.5, 11.5 basically talks about a list of areas wherein you can make your investments. For example, if you have a corporate donations, okay, you have received corpus donation, that corporate donation is not taxable, not considered as an income, provided you have invested in 11 subsection 5. Okay, so this is a broad, a very brief conditions, a very you can say condition for claiming your exemption under 11 and 12. If I go to the next slide, there has been a lot of amendment which comes in every year in the topic of trust. Okay, so I can see few chats coming in. So since my screen is shared mode, uh, I can't take I can't take the questions as of now. At the end of the session, we shall take up, because I can't see the chats exactly. A lot of so coming back to the topic, a lot of amendments is something which is brought in every year. The topic of trust law. Okay, few of the amendments which have been brought in the last couple of years. One very big amendment that is have been brought in effective financial year 21-22. The application of income. Okay, before 21-22, let's say this is our practical example I am giving you. I have received a donation of 1 CR, 85% I have to spend. I spent 60 lakh rupees. Okay, 40 lakh, sorry, 25 lakh rupees is something a shortfall. So what I do, I make a entry, a pass an entry in the books, expenses to expenses payable 25 lakh rupees. Okay. So my expenses becomes your 85 lakh rupees. So that is something compliant to the law. Income Tax Act or the CBDTs saw a loophole on this, and from financial year 21-22, they have specifically said that expenses will be allowed only on payment basis. So any entry, any provision that you are making in the books as on 31st of March, that is not counted as an application. So if the particular year you have received 1 CR and you have spent 85 lakh rupees, I am using the word spent, that is that amount has been debited from your bank account, only then you can take the benefit of 85%. Else it is a shortfall and you have to go and file a form 9A, form 10 as the case may be. Few more you can say changes brought in have been brought in. I was referring to form 10. You have to spend the income in the 5 years. If you're not spending in the 5 years, earlier law provides that in the sixth year that income gets taxable. Now that has been changed to fifth year. So in the fifth year, this is the fifth year. Last year you have to spend that amount. If you're not spending that amount in the fifth year, it gets taxable in the fifth year rather than sixth year. One another change that has been brought in, again a very important for me for today's discussion, because litigation circles around this, is the filing of form 10B and form 10BB. So form 10B, form 10BB are the audit reports which is required to be filed in case of a trust or a charitable entities. In case of a commercial entity, it is form 3CD that you file, okay, 30th of September. But in case of a trust, it is form 10B or form 10BB that are required to be filed. Okay. The due date as per income tax law is 1 month before the filing your return of income. In case of a trust, you have to file your return of income before 31st of October in case of audit is required. In case audit is not required, it is 31st of July. Now question comes, when audit is required? The audit is required in case your donation, your income in a particular financial year exceeds 2.5 lakh rupees. So in a particular financial year, you have donation or income exceeding 2.5 lakh rupees, audit is applicable and you have to file your form 10B or 10BB before 30th of September. That is 1 month before your end of the due to filing of return of income. In case of audit, it is 31st of October. So you have to file your 10B by on or before 30th of September. Okay. So yeah, file. So this was a very brief, you can say, about the basic foundation for your trust. If anyone has any doubt, we can take up, because now since I have laid a very brief foundation of trust, I will take the what are the litigation issues which circles around the trust or NGO. So anyone, any doubt can write on the chat and I can explain. So Mr. Ghosh has written what are the interplays between Form 9A and 10. Form 9A is basically when you have not received a particular income and because of which you are not able to spend that, you can file a form 9A and you can say to the income tax department that when I receive that particular income, I will spend that for the purpose of the trust. That is the case of 9A. Form 10 is something which is a general form. If you have not spent that 85%, if there is a shortfall in spending 85%, rather I shall use a technical word. If there is shortfall in application of 85%, you can file a form 10 and the shortfall that is there, you can spend in the next 5 years. For example, if I have received a donation of 1 CR, I had to spend 85 lakh rupees. I spent 60 lakh rupees. 25 lakh rupees, I can file a form 10 and I can say to the department that I will spend this 25 lakh rupees in the next 5 years. So the income tax law says that in that particular year, 25 lakh rupees will be considered as a deemed application. Okay. If it is deemed application, so my 60 lakh rupees I have spent, 25 lakh is my deemed application. So total application is 85 lakh rupees. So that 15 lakh rupees, 1 lakh minus 85 lakh rupees, 15 lakh rupees is exempt from taxation. Okay. So that is the interplay 9A and 10. 10 is for 5 years. 9A is for the year in which, up to the year in which you have received that particular income. So practically, if I talk about, if you have to uh, choose between Form 9A and Form 10. Go for Form 10 because in that case you get a period of 5 years. Vis-a-vis in case of Form 9A, you get some up to practically a 1 year because you generally get your income in the next year. Okay. So due date filing of return on income for EY purchase service for the trust whose income is less than it is your 31st of July. Okay. Now is the extended period. So you can see if that particular circular provides for trust or NGO or not. I remember it's for individual, but that has to be checked. Can I confirm? Yes, you can file. So Form 10 doesn't prescribe any particular condition. You can file Form 10 even if you have not received the income. Okay. And rather, this is particular advice which we give to all our clients that rather than going for 9A, go for 10 because in 10 you get a period of 5 years. Okay. Anyone, any question or should I proceed with the litigation part?
There are two questions in the chats.
I have answered both. There were 3 questions. I have answered all.
Okay.
Yeah. Yeah. So I'm moving with the, I just stopped sharing my screen. I will share the next screen, next PPT. Yeah, I request if someone can confirm if my screen is visible.
Not yet. Earlier it was PPT was visible.
Yeah.
Yes, now
Is it
it is
visible now?
starting. Yes.
Yeah.
One more doubts is there in the chat.
Yeah. Yeah, I'll take up.
What is the due date of? Yeah, 2-3 doubts are there. I'll tell you. Please, what is the due date of submitting the
Mm.
return of income when the income is below 2.5 lakh?
So it is your normal 31st of July. If your return of income is, if your donation or income in particular here is less than 2.5, then it is your 31st of July.
Whether
Whether circular, so
Whether
whether
circular
circular,
number 6 2023 extending
mm,
due date for filing from 10 9A up to due date of 139-1 gives general extension for assessment year 45, 2024-25 and 25-26 also.
yes. Yes, so this particular circular is a very important circular which we have dealt a lot in when I was a part of EYS. So yes, this particular circular gives a general extension, and this is nothing you can say that uh, particular circular which doesn't provide a specific assessment year, but it provides a general extension to all the assessment years. So even for the assessment year 25-26, you can take the shelter of circular 6, and you can say that the filing the form 9A or 10, if you file up to the return filing due date 139-1, you can get the benefit accumulation. But there is a catch. There's a catch in this particular circular, which I want to particularly highlight. So the income tax law says that you have to file Form 9A, Form 10, 2 months before your return filing due date. That is your 31st of October 2025. So in that case, if your Form 9A, Form 10 is applicable, in that case, your return filing due date, the Form 9A, Form 10 filing due date becomes your 30th of October 2025. People take the shelter of Circular 6 and say that even I file my Form 9A, Form 10 on 31st of October, that is sufficient compliance. But there's a catch. When your return of income gets processed by CPC and you have filed your Form 10 or Form 9A after 30th of August 2025, let's say the example of 31st of October, okay? That 25%, in my case, the example which I was taking a lot of example, the 25 lakh rupees which you have accumulated and set apart for future 5 years, the CPC practically will not give you the benefit of that 25%, 25 lakh rupees, and that will be added to your income. Okay, and again you have to either go for a rectification or you have to go for appeal. Okay, so practical, you can say advice which I give to all my clients even today. If you have your, if you have prepared your books of accounts and you say that there's a shortfall from 85% and yes, there's a requirement to file a Form 9A or Form 10, get your accounts audited before 30th of October and file your Form 10, Form 9A before 30th of October. Sorry, 30th of August. Because this particular circular CPC is not following, and if you want to take the benefit of this circular, you have to either go for appeal or go for rectification. And in case of CIT appeals, there has been cases that if you are filing appeal late this might go up to tribunal. Okay, so rather than taking the so at the time, at the initial stage, at the compliance stage, a personal or practical advice, we should target to file your form 9A, form 10 on or before 30th of August. Okay. So I'll take up the next queries afterwards. So I'll just move to the next part, and thereafter at the end I'll take up the next queries. So on the litigation part, on the basis of the basic of the foundation for the trust and ensures, uh, I deal a lot of litigation which comes up to the trust or NGO on a daily basis. Even today in the morning, I got a call uh, wherein there is some demand raised for a particular trust, and again, it was just because of some compliances lapses, because of which litigation has been demand has been raised, and a small thing can be done to, and how the things can be done to quash the demand. So this particular slide covers your key litigation issues which a trust forms or a trust faces. This is basically your compliances related lapses or compliances related loopholes because of which litigation or demand came in. One of the basic reason delayed filing of Form 9A, Form 10, Form 10B or Form 10BB. So these are the forms which I spoke, 9A or 10, you have to file 2 months before 30th of August. Form 10B or Form 10BB, which you have to file ideally 1 month before your return filing due date. Then I will take each topic in detail. Disclosure omission. If you when you file your ITR 7 in case of a charitable entities, in the Part A general tab, wherein they will ask you that if you're taking any benefit, any exemption, so under which section you are taking and what is the registration number. So I have came across cases wherein people are not filling that particular tab. Okay. And because that particular tab is not filled in, at the time when CPC processes your income tax return, they don't give you a benefit of section 11 and 12. That is your 815% and everything. Okay. Practically, I am dealing case for a client wherein this particular disclosure is not there. Okay. And we file a rectification. Now, if I talk about, people say that, acha, theek hai, I have not filled that particular tab. You go and file a rectification. Okay. But these are a lot of challenges which come in. Okay. One challenge which I face for my client, that is a particular charitable entity, the CHOW, the Judicial Assessing Officer, that was not a ITO exemption. For a trust, a society, a Section 8, okay, claiming a benefit of Section 11 and 12, the Judicial Assessing Officer is an exemption board. Okay, that is very important. For every person who is there in the seminar, have any client who is taking the benefit 11, 12, just check who is a Judicial Assessing Officer. That should be a exemption board. In my case, the client who got a demand because 12A was not mentioned in the ITR, the Judicial Assessing Officer, the JAW, was not the exemption board. So when we filed when we were preparing the application, we just saw that the JAW was not the Judicial Assessing Officer. So the first task which we had to do is to get a file transfer from that particular assessing officer to the exemption board. And believe me, that took me around a year for transferring the particular file from the incorrect JAW to the exemption board. Okay, a lot of follow-ups with the JAW, and once a JAW, there are two NOCs, the current JAW and the proposed JAW, they will send NOC to the PCIT that they don't have any objection of transferring the files. Then file goes to PCIT, they will see, they will scrutinize everything and they will pass an order. Okay, so there was a lot of liaising between two JAWs with the PCIT, and after 1 year, that particular file got transferred. So if I talk about trust, there's a lot of things which go on. So just a practical advice, if any of your entities, any of your client is a trust or an NGO and the JAW is not an exemption board, ideally get transferred to exemption board, because in case future some rectification has been filed, your present JAW will not pass the order. It is only the exemption board who can pass an order in case you're claiming any 11 or 12. Okay. The third one, 12A restriction denial. A very basic thing. you take a benefit under 12A, take a registration under 12A or 80G. A very simple 8 out of 10 litigation issues which I see today is your cancellation or rejection of a 12A application. Okay. Other issues, mismatch, tax payment, tedious default. Another example, when we are preparing the books of accounts for a trust, it has a different chapter. Okay, the normal chapter which is applicable on the entities are not applicable on trusts except few. For example, cash payments. A trust cannot make a payment exceeding 10,000 rupees. 48.3. Tedious provisions. A trust is required to make a payment on which TDS is applicable. They are required to obtain a TAN, required to deduct the TDS and make the payment to the government and file the TDS returns. If that are not being done, these are all, you can see the compliances which is required to be done even by a trust. Okay. So if I go to the very first, the basic issue which I find for a trust or an entity or charitable entity is your delayed filing of Form 9A, 10, 10BB or 10BB. So the person who asked me the question regarding Circular 6, I'll cover that also here because that is something which is coming in my particular slide. If you're filing your form, the form which is required to be done 9A or 10 before after 30th of August or 10B or 10BB after 30th of September. Okay. Uh, Even though you have a circular which says a lot of judgment which says that even at the time of processing your return of income, Form 9A, 10, Form 10B, Form 10BB was there with the CPC, exemption will not be denied. Okay. There's a circular 6 which the person said that Form 9A, 10 can be filed even on or before the due date of filing the return of income under Section 178 of Section 1. Even though there's a circular, I still advise a practical advice to file your Form 9A, 10, 10BB, 10B before the due date as prescribed in your Income Tax Act, 2 months or 1 month before your 139(1). Because at the time of processing the return of income, CPC doesn't provide you the benefit. If the CPC has not provided you the benefit, only option that is left is your appeal. Or you can also see that the Chow will provide that rectification or not, but chances are low because the department may take a view that there is not a mistake apparent from record. You have to go for an appeal and you have to file before the commissioner. Okay, and in case there is a delay in filing the appeal, because practically I have seen that in case of a trust or charitable entities, every year the management, the board keeps changing. Okay, so it has, and the advocate or the chartered accountant who is doing the accounts taxation of the trust and NGO, and given the case they are not an expert who is working for trust and NGOs, I have seen that that particular demand, because of delayed filing of your 9A, 10, 10B, 10BB, suitable action, suitable resolution, filing an appeal before the commissioner or filing a rectification is not done. Practically, which I have seen every week, I see that in case of a charitable entity, they have a demand in the income tax portal. Without going into the 143(1) intimation to understand the reason for demand, people just go and reprocess the return in the rectification part. Okay. Feeling they believe that if I do a reprocess the return, option of just reprocess the return, my demand will get quashed. Okay. And that is something which is may or may not happen if your demand is something like delayed filing of form. Okay, 9A, 10, 10B, 10BB. Even if you reprocess the return of income, nothing will happen. Okay, you have to go for an appeal. Limited chance that your job will give you rectification benefit. You have to go for appeals. Okay, practically in my one of the client case, demand came in for around for AY 2021. Okay, uh, there was a demand of around 5 lakh rupees because the reason was incorrect filing of Form 10BB. Okay, in Form 10BB, an income has been reported as taxable. However, that was not taxable. That was the 15% amount that is set apart. Okay, but in your Form 10BB, when the 10BB was filed, that has been shown as taxable. So because of that particular amount, demand has been raising in 2021. Since 2021 till 2025, the person who was handling the taxes, every time he was just reprocessing the return of income. And every time he used to reprocess the return of income after a couple of months, 5 months, 6 months, 7 months, the intimation would come in wherein the benefit was not allowed. Then again, reprocess the return was doing. So around 5 to 6 times reprocess was done. And last time when I saw what was the exact area for exact reason for the demand, and I saw that it was because of some incorrect filing of 10BB. We just revised the form 10BB, and then we did the reprocess the return. Okay, and within a couple of weeks, the demand got quashed, and there was some refund, and the trust got the refund also. So, as I said, the topic of trust and an NGO is not so technical, rather. Okay, if a person has a basic understanding of your foundation of your trust and NGO, a lot of thing gets easy. Just the thing is taking or understanding that a trust and NGO requires good amount of time. Practically all the practicing chartered accountants or the advocates who are there in the seminar, when we since the audit season is ongoing, okay, one thing which everyone would agree, that if we have 50 clients, out of 50, 5 are trust, 45 are normal commercial entities. When we do the audits, our first target is at 45 entities. And for that particular trust, we say that we'll do at the end when this 45 gets over. Okay? Practically anyone, I assume everyone does the same, or 90% do the same, which is fair enough. Okay? But one thing has to be acknowledged and appreciated, that a trust or an NGO requires good amount of time. And in case we are saying that a return filing due date for a trust is 31st of October, and on the last week of October, I'll ask my client to share all the data, all the documents, that books of accounts, and in the last week of October, I see that there's shortfall of 85%, and I have to apply for Form 9A, Form 10, or the donation is exceeding 2.5 lakhs, so Form 10B, 10BB is required to be done. And I filed the 10B, 10BB, Form 9A, Form 10 on the last week of October, whereas in the due date as per income tax law has been expired. So that is the ticking clock, that when you file your return of income and once it gets processed, 99% chances you have a demand. Sorry, the income tax department will not give you the benefit of the 25% because 9A10 has not been filed within the due date as per Income Tax Act. If the Form 10B, Form 10BB has been filed delayed, practically income tax, the CPC Bangalore will not give benefit of the single expenses that you incurred. So if you have a donation of 10 lakh rupees and you have expenses of, let's say the example, 7 lakh rupees, okay, the CPC Bangalore will process the return without any expenses of 7 lakh rupees, and they will raise a demand, consider income of 10 lakh rupees. So I have recently, last month, I have filed appeal before the commissioner for the same entity for the 5 years starting from 1819 to 22-23. In all the years, there was either delay in filing the Form 910, or either a delay in filing the Form 10B, Form 10BB, or either the ULN number was not written in the Part A of the ITR 7. And last month, we had filed the return appeal before the commissioner along with the condonation. Okay, so that's why I am saying that the compliances, if we have a good understanding of the compliances part, and if we do the compliances on time, 90% cases of having a demand or having a litigation for a trust gets quashed. The 10% will remain because of technicalities, whether the activity is charitable or not. So again, I am dealing for a client wherein the activity is in question, that is charitable or not, but that is something different. So 90% your litigation for a trust or NGO circles around your compliances, and 90% of the claim which I have worked on for trust and NGOs, or for having a litigation of a demand, it is because of compliances loopholes. Okay, so coming back to the topic, Form 9A, 10 or 10B, 10BB, there is a lot of judgment which says that if that particular form is available with the CPC before processing your 143(1), benefit will be allowed. But again, that will be at the time of your appeal before the commissioner. Okay. So since people are from Calcutta, there has been a judgment of Calcutta Tribunal, Calcutta Tribunal order, Salt Sanskriti Sansad, wherein exactly on the same issue they have allowed the benefit. Again, a very simple, a procedure lapses cannot be a reason for denying the benefit. Okay, if you have made a compliance to all the other things, section 11 and 12, your activities are genuine, your expenses are genuine, you are doing that, objects are genuine, charitable entities, your benefit will not be allowed just because your form 9A, 10, 10B, 10W has been filed delayed. Again, a very important judgment, Sarvodaya Charitable Trust, this is a particular, you can say, judgment which I find it exactly in every judgment for your 9A, 10 delayed filing. Gujarat uh, High Court, Gujarat Tribunal, then your CIT Rai Mahaswar Trust reported 1992. Again, a very important judgment, which these are the few judgment which provides you the benefit that even the return has been, the forms have been filed delayed, but you will get the benefit. Okay. So coming to the key takeaways from the above judgment is, if you have a registration, a valid 12A registration, audit report is there, just because of procedural lapses, your benefit will not be denied. Okay. Again, anyone, any question as of now, or should I proceed?
If anyone wants, I can unmute them. Please raise your hand or write in the chats. No, sir.
So just a question of Deepak Patwari ji. So you are saying that suppose a trust is formed by a person and provided property as corpus, okay? The object is to relief of the poor from rental income. Understood. So what is a rental income? Like, to whom the particular property has been given on rent? It is on commercial basis. For example, if you have given that property on a commercial basis to a commercial entity and you are earning that income, and from that particular rental income you are spending 85% for the relief of poor. Okay, so this is something which is not allowed. You can't take the benefit of 15% of section 11 and 12. That is pure taxable. But suppose you are saying that particular property you have rented out to some entity, and let's say the example, you have made that property as a dhamshala, okay, and you are giving on rent at a very affordable price, as subsidized price, okay. In that case, you can say that this particular rental income that you are earning, that is charitable. Okay, so when you analyze activity for a trust, you have to see two parts. One is your receipt, whether the receipt is commercial or not, sorry, charitable or not. Then your expenses, whether that is charitable or not. In your case, your expenses relief of poor, and that is covered in 250, that is allowed. But in case of rental income, whether that is commercial or charitable, that has to be analyzed. Again, I would like to repeat, if that particular rental income you are earning from a commercial property, commercial place, you are given on a commercial basis, that is something you cannot take the benefit of section 11 and 12. But vis-a-vis, you have given that particular property on rent on a subsidized rate, let's say the example to a dhamshala, then that particular income that you are earning on the rental income from that property, from that dhamshala, if you're using for relief of poor, you can claim the benefit of 11 and 12. So I'm proceeding again. So last year in November 2024, there was a circular number 16, which particularly provides for a condonation. So let's take the example. I was referring to three judgments. Okay, there's a recent judgment or very famous judgment, but if you go to your taxman tax sutra, you will get n number of judgments. Okay, but since the you can audience was more from Calcutta, so I found out few recent judgments from Calcutta High Court or Calcutta Tribunal. So the judgment which I had referred in the previous slide, just like these three judgments, basically talks about your providing the benefit provided your form was filed before your 141 intimation. If that particular form 9A, 10, 10B or 10WB was available with the CPC before processing your 143(1), benefit will be allowed. Okay, but what in the case that your form was not there with the CPC, or you have not filed the form before your processing of income, return of income under 143(1), in that case you have to go for a condonation. Okay, CBDT has provided a circular number 16 2024 of November 2024, 18 November 2024, which provides for a timeline for filing the condonation. If the delay is within your 365 days, then filing the continuation application with the PCIT or the CIT exemption. Okay, if the delay is more than 365 but up to 3 years, then principal CCIT or your DCIT is a person who are authorized to condone your delays. Okay, so anyone who has an application, a Form 9010, 10B, 10BB, and filed delayed beyond even it was not filed even at the time of processing of 143.1 and continuation application needs to be filed in. But practically, I have seen a lot of judgment within the tribunal. I'm not referring to the commissioner, but the tribunal. They have given the benefit of 11 and 12 even in case the forms was filed after 143.1 intimation and even though continuation application was not filed. So they are simply relying on the judgments and saying that if you have complied to the other condition of section 11, even though there have been procedural lapses, tribunal are giving the benefit, but on a safer side, I advise that in case you have a delayed, file a condonation application with the relevant authorities so that to be on a safer side, to be ensured that the benefit is not denied just because the application is not filed. Okay, so there's a ticking clock ticking of 3 years. So file an application before the 3 years, and again, if that particular 3 years is lapsed, you have to file an application for conversion with the CBDT under section 119. Okay, so this was a brief on your compliances part. Coming, just a minute, I have a question. So I will take that question at the end. Yeah. So coming to your omission to, as I said, for one of the client, uh, in the return of income, when you file your ITR 7, Part A General, there's a particular tab. I remember it is A19, A19 and A20. So basically, A19 talks about your detail of your registration under which you are claiming any exemption. So you have to file your details of 11 and 12. A20 talks about any other registration which is you are required to take in other than 11 and 12. So for A19 part A19 of your Part A General, you have to fill in the detail for 12A if you have a 12A and ATG if you have an ATG. There has been cases wherein I have seen cases and practically I am dealing one of the case wherein that particular tab was not filled in, and just because that particular tab was not filled in, the entire benefit was not given and the entire receipt was taxable. Okay. Again, a lot of judgment that procedural lapses cannot be a reason to deny a benefit. If you have complied to everything, you have a 12A registration, you have made 85% expenses, application of income, just because there's a delay in filing, or sorry, just because you have missed or you have omitted to fill your 12A details, that cannot be a reason to deny the benefit, and you can go for rectification. I have gone for rectification, and I have had discussion with the ITO exemption, and this is particular, they will consider as mistake append from record and they will get the benefit. But this is something which is for Jharkhand jurisdiction, people who are there from apart from Jharkhand, if the particular ITO exemption or the exemption ward, if they can provide the benefit on the rectification, you can go for rectification, else you have to go for appeal. Yeah. So one major thing, denial of 12 registration. So many times I have seen that suppose you don't have a 12A registration, a valid 12A registration, but you have filed ITR 7 and you are claiming the benefit of 11 and 12. Okay, in that case, when the CPC Bangalore process the return of income, they will not give you the benefit. Now see the practical example, you have a receipt of 1 CR, you have spent 90 lakh rupees, 10 lakh rupees is your income which is set apart, which is less than 15%, it has been set apart. Blanket exemption you get for the 15%. 10 lakh rupees in my case. But you didn't have a 12A. For example, your 12A got cancelled, but even that you have filed an ITS 7 and claimed the benefit of 11, 12. Since you didn't have a 12A registration, when the time CPC Bangalore will process the return of income, they will consider entire 1 lakh rupees as your income. They will not give you the benefit of that 90 lakh rupees. And on that 1 CR, they will raise a demand considered as an AOP. Now one important question comes in. Let's say the example, you don't have a 12A registration for that particular year and you don't want to renew for 12A. because of XYZ reason. Again, I am dealing for one of our client wherein they don't want to renew their 12 recession because they want to wind up the entity. Okay, but they have a demand in hand. If I go for renewal the recession, that will take around 5 to 6 months, and even that is not surety that I will get a benefit or not because there is some commercial activities that the trust was doing. So in that case, there's a judgment, couple of judgment, but the most important judgment, Petroleum Sport Promotion Board, Delhi High Court, which says that in case you don't have a 12A registration, your taxation would be on gross basis or not, sorry, it would be on net basis, not on gross basis, which means that the CPC Bangalore processing the return of income and taxing on the gross income of 1 CR, that is incorrect. Okay, the 90 lakh expenses that you have incurred, okay, the revenue part, suppose out of the 90 lakh rupees, 80 lakh rupees is the revenue expenses, 10 lakh rupees is the capital expenditure. Okay, so that 80 lakh rupees revenue plus 10 lakh rupees ka depreciation you will get. And let's say, for example, 10 lakh ka depreciation is 2 lakh rupees. So 80 lakh plus 2 lakh, 82 lakh rupees is your expenses. 1 CR is your income. 18 lakh rupees is subject to taxation as an AOP. Okay, so even this is one of the very important, a very key litigation area which I have dealt with. Okay, so you take the benefit of this particular judgment, and up to assessment year 2023, basis this judgment, the assessing officer, the CHOW, will process your return of income, will prepare a computation of income considering your all the incomes, considering you are not taking the benefit of 11 and 12, and they will compute your taxation, taxable income, and your taxable taxes. Post AY 22-23, that is from assessment year 23-24, a specific amendment have been brought in the Income Tax Act, Section 13, subsection 10, which provides that in case the benefit of 11 and 12 is not provided to you, the relevant expenses which is otherwise allowable to you, if you are not a charitable entities, but which is otherwise allowable to you, okay, that is a revenue expenditure, depreciation on your capital part, okay, that is allowable to you. And if you have a matter post 2024, take the benefit of this particular circular and you can easily win the particular case. Okay, so what I feel is now the time is almost done, so I would like to stop it here. And you can see I can take the questions now, else it will take a lot of time if I continue. Lokesh ji, yeah, anyone, when a trust is denied exemption, then what is the rate of income and on what amount cost? See, if your exemption has been denied and that has been denied by your CPC in 143(1), they will tax on the gross amount, okay, which is incorrect. And the rate of income 30% plus surcharge, plus it will be on MMR. So 30% plus a surcharge plus a 4% cess. If in your case, if you have a client, a entity who have been subject to taxation, you take the benefit of, if it is for assessment year 23-24 on onwards, there's a particular amendment, section 13, subsection 10. If it is a case before AY 22-23, on or before 22-23, there's a judgment, Petroleum Promotion Board, Petroleum Sport Promotion Board of Delhi High Court, take the benefit of that particular case law, and you will get the benefit. Only the net income would be taxable. When calculating that net income, your revenue expenditure, your depreciation or the capex will be only allowed, and it will taxable at MMR. Any other question? I would like to take up the question now. In case AOP, there is a demand, CPC process the return having demand. Payal ma'am, your question is not clear. Can you just elaborate, please? Can a trust get 15%? Can a trust get 15% exemption on 11A plus? Sameer ji, your question is not clear. I can't understand. Can a trust get 15% exemption under 11A plus 2.5 lakh of basic exemption limit? So you are saying that 2.5 plus 15%? If that is your question, then that is not allowed. So if your total income is more than 2.5 lakh rupees, 115 TD, 115. No, so if you're Samir, if you're saying that in case a trust is denied 12A exemption and they are getting taxed at AOP, then they don't get a benefit of 2.5 lakh basic exemption. Demand is there in case of AOP having tax at MMR. Okay, okay, Payal ma'am. So what is your question? In case AOP for event 2024, there is a demand. CPC has processed the return having demand with MMR. Okay, so what is the question, ma'am? And why CPC have processed your income till A, till at where there is no demand? Ma'am, can you just unmute and speak up because I am not able to understand the question. But it is seen that trust treated as AOP gets
Yeah,
taxable.
let's see the question and answers.
Hmm.
There are options.
So, Ghoshda, so in case you are saying that AOP, right? If you see that practically, when the CPC processes the return of income, it is your MM, it will always taxable at MMR. For 2.5 lakh limit, you are saying it should be treated as an AOP, and that individual, if you see the taxation of AOP, all the members, it will be indefinite, and that particular slab rate, that none of the members should have income more than 2.5 lakh rupees. So if that is satisfied, if that condition is satisfied, you can take the benefit of 2.5 lakh rupees.
Yeah, if required, I'll unmute anyone.
Yeah, can you just unmute Payal ma'am? I am not able to understand the question.
Okay, just 1 minute. Yes, I'll do one thing. I'll ask all to
Hmm.
unmute. So
Yeah.
one by one, we can have the. Yes,
Hmm.
Payalji, you can unmute yourself. Payalji, I have unmuted them.
Okay, so Faz G, the question is what is the difference between a religious trust and charitable trust? So basically, religious trust, a temple, this is pure religious. Okay, but if I talk about your, for let's say, the example for one of my client, uh, in case of a religious and charitable entity, which is doing both religious or a charitable part. Let's say the example for your Ramakrishna Mutt. They are a part of religious also, they are part of charitable also. Okay, so that is the difference between your religious and a charitable entity.
Hello.
Yeah, ma'am.
Sir, there is a client status is AOP. Till assessment year 22-23, I am filing the return and there is no demand processed.
You are
Okay.
filing ITR 5 or ITR 7?
ITR 5, AOP.
Okay.
But the last assessment year 23-24, the ITR has been processed with demand.
Hmm.
No reason has been shot why they are charging demand. The status of all the trust members are below the limit, taxable limit. Still, there is demand at MMR rate.
So you just see one of the reason could be that when you file your ITR 5, then one of the particular general part they ask for the name of the person, the members, and the percentage. Okay, just check whether in that particular tab correct information has been filled in, and even in case the correct information has been filled in, and in the intimation their reason is not mentioned why they has been taxed at MMR, you file a letter with the JAW asking for a clarification why the tax has been levied at MMR and what is the reason for that, and the JAW can give you a clarification on that. But
Okay,
in
but
case you are saying,
assessment year 22-23, there is no demand. The return has been
hmm,
filed on that way only.
so could be a case, see, for ITR 22-23 or up to 2023 or from 23-24.
Okay,
Okay,
there.
the filing part, there could be some lapses in the filing, ITR filing part. Okay, as I said, in a particular part is general, there's a particular tab wherein you have to fill in the details of all the members and you have to also say the percentage that that particular
So I
percentage hold.
filled the members details and the percentage is zero.
Okay. And even that you have got a demand?
Yes, sir. Yes.
Okay,
That's the.
in that case, you can consider filing a rectification or consider filing an appeal because
Okay.
that is a rectification. I am doubtful. The job will consider this as a mistake apparent from record. You can go
But
and
sir,
file a
I had heard that this issue is coming with many clients.
okay. Yeah,
Most
that
of
is
the clients
okay.
are getting a demand for filing AOP in this way only.
Okay, it could be a case. It could be a case, and in that case, you can consider filing an appeal.
Okay, appeal is only the way, I think.
Yes, you can go for an appeal in
Sir,
that case. If you are saying that you have all the conditions satisfied,
Yes,
that
sir.
you should not be taxed at MMR. If that is the case, you should go for an appeal.
sir, can
Okay,
I
okay, sir. Thank
add
you.
Yeah,
to this? Can I add to this?
yeah.
So the one point,
Hmm.
her point is absolutely correct. It is a change in standby
Your voice is breaking.
CPC.
Your voice is breaking.
There is no problem with return filing. Only the way out is
So
they came
your
to
voice is
know.
breaking. Your voice is breaking. Some issue at your end.
Am I audible?
You're audible, but your voice is breaking, sir.
Hello,
Am
sir.
I
I have one more
audible?
query.
Hmm.
Sir, this
Okay.
assessment year 24
It
25, we
is
have to
only
file.
when
That's why
she.
your voice is breaking.
Hello.
Yeah, ma'am.
Sir, this
Now am
assessment.
I audible?
Now better.
Okay.
Hello.
Sir, can I?
Hello. Yeah, yeah. Please, ma'am.
Yeah, Payalji, you can speak.
Sir, this assessment year 24 25, we have to prepare financial statement as per NGO guidelines.
Yes, if that is an issue that you create as per your format that is prescribed by ICAI, that is applicable from 1st April 2024.
Okay, sir. Thank you, sir.
So even for all my clients, I have started preparing the financials as per your new ICAI guideline.
Sir, I have a doubt.
Yeah,
We have filed Form 10BB for assessment year 23-24 within the due date.
due date means
Uh,
30th of September.
yes, sir, 30th of
Okay,
September.
okay,
Later, we received the order from CPC raising a demand of about 10 lakhs. The reason is there is some mismatch between the auditor report and return of
ITR.
income.
Okay,
And the error is in the auditor report, sir, because this is the first year, assessment year 23-24. The intimation is just received after 1 year. So there is a
okay.
delay of more than 365 days even to file a condonation petition.
Condonation. So
If I file the,
why you want to file a condonation? You said you have filed within the due date, right?
yes sir, original within due date, we have filed the rectification also of the auditor
Okay,
report after 365 days, sir. Then we made a
okay.
grievance petition to the CPC. Please
Hmm,
consider the revised audit report filed on so and so date, the 19th
hmm.
March 25, as the proper one and process may return accordingly. The CPC
Okay.
rejected the grievance petition as well as continued to hold the demand alive.
So, so just to make it understandable, the facts. So we're saying that you have filed a Form 10BB within the
Within
due date
time.
provisional within time, and thereafter you have revised the Form 10BB, right?
Yes, sir. Yes, sir.
And
After 365 days.
okay, after 65 days, you have revised the Form 10BB, and then you
Yes.
have then you have done a reprocess the return of income.
Yes, sir. Yes, sir. Filed a reprocess return and
Okay,
also filed a grievance petition
grievance
intimating that
practically
the
grieve
revised audit report is filed on so and so date with
practic
acknowledgement number so and so.
practically grievance doesn't give any solution, but you are saying that you have filed your form revised Form 10BB. So do you know the reason why the demand has been came?
Yes, sir.
Because you are seeing
Even
the discrepancy in the ITR and the 10 BBB, right?
10 BB and
So,
error
yeah.
is in 10 BB, sir.
Okay. And what is the error about?
It is like 11 to accumulation we have mentioned in 10 BB,
Hmm.
whereas it is 15% accumulation. Return
Understood.
is filed correctly with
Hmm.
15% accumulation, that carry
Hmm.
forward amount.
Hmm.
Whereas in the audit report, we have shown as 11 to accumulation. That is
Okay.
the discrepancy.
Understood. If in case ideally in that case, uh, CPC should allow a benefit because exactly in the same case, exactly the same issue. In one of my case, I have filed a revised form 10BB, then I filed a reprocess the return, and the demand got quashed. Okay, and there was some refund in the return of income and got a refund also. In your case, you are saying that even after revising your form 10 double B and reprocessing return of income, if the demand is not quashed, okay, practically what I believe is that still there is some issue in your form 10 BB or some issue in your ITR. If you're saying that there is no issue in your discrepancy in your form 10 double B or form 10 ITR, consider filing a rectification or appeal. But before going for a rectification and appeal, I strongly advise just have a look again on your 10 double B and your ITR because there should be a discrepancy among these two because of which the benefit is not being allowed. And because given your case that condonation part, since your original 10BB was filed within the due date, there is no practically requirement to go for condonation.
Practically no need, sir.
No need for
Because
condonation.
department is counting the revised audit report as a delayed one, and now they are advising condonation. When I
No,
met
so
the
again,
jurisdictional
no,
exemption
that is
ITO.
incorrect part on them. So I just have to say that since I have filed a revised one, it gets into the shoes of the original one, and the due date will be considered as 30th of September when the original 10BB was filed. So as I said, for exactly the same matter, exactly the same issue, I had filed a revised form 10BB, I had reprocessed the return, and my matter got closed,
Okay,
and I
sir. I
got the
will also
refund.
try, sir.
You
I will
you
also
try,
try, sir.
in case you are not able, in case you are not getting the resolution, you can connect with me. I'll see what is the issue on that.
Okay, sir. Please
Yeah,
share your cell number, sir. Email
yeah,
ID on
I
the
Yes, we will
chat.
share in
yeah.
the group. We will share in the group.
Okay, okay,
Also,
sir.
ये
Thank
Divyansh ji, you can unmute yourself. Divyansh Kanoy,
you. Okay. Right.
you are raising hand.
Hello, sir, am I audible?
Yeah,
Yes.
you're audible.
Good evening, sir. So
Good
actually,
evening.
my query is that so nowadays a lot of a lot of people or promoters they are not willing to take up donations and create charitable trust and try to create some kind of economic activity within the trust to keep the operations and to self invest the funds again into the charitable operations. So, how are they supposed to proceed proceed and exist as a charitable entity without taking up a 12 AB registration?
Can you just come again once with an example because the question I was not able to understand.
So basically, a trust doesn't want to take public donations and so doesn't want to
Okay,
go for a 12 AB registration. They want to,
okay.
but for sustenance of the trust, the charitable organization, they want to create some kind of economic activity within the
Hmm,
organization. So
hmm.
for self sustenance and from the profits or the surplus, they will be doing the charitable proceeds.
Okay.
So in that query, as you, I think so, you were explaining in the petroleum organization example. I did not catch it. So
Hmm.
such examples, how come? How are they supposed to process, or is there some separate registration that they are supposed to take up?
So you're saying basically you have an entity, a trust, but they don't want to go for a 12A registration, right? Correct.
Yes, sir.
Correct. So the 12A chapter will not apply in your case. You'll be treated as a normal AOP. Okay. In case you're treated as a normal AOP, the income that you're earning,
Mm-hmm.
okay, income minus expenses, the net income that you are earning, that is taxed at MMR.
So,
Okay.
but the
So,
proceeds are again reinvested into the charitable. Suppose, for example, if I take up, suppose an NGO is working in women empowerment. So they are trying to, they're training the women into some maybe a handicraft or some kind of economic activity,
hmm.
asking them to produce the product, selling it, and the profit or the surplus that they are generating on that, they are again investing in on their empowerment or development of those women or that section of the community.
Understood. Understood. But since again, you are not a 12 registered entity, but you are a normal commercial entity, right? Even though you are reinvesting, okay, if I talk about your income expenditure or your profit and loss account, in that
Mhm.
particular, you are getting a surplus or you're getting a deficit.
There's a little bit deficit or a zero sum game.
If there is a deficit or it's a zero, then there is no taxation on that part. If I have understood the question correctly, you basically wants to ask the taxation part, right? In case I am getting a surplus or if I am getting a deficit, what will be the taxation part?
Yeah, सब नहीं, but मतलब suppose they sold those products for 100 rupees,
Hmm.
and the costing for that maybe was 60 or 70 rupees, and
Hmm.
now the 30 rupees again they spend those 30, not as मतलब for the business, but they're spending that 30 rupees for the
Hmm.
development of that particular section of the society. So
Again,
as
so that
my PL
again
will be
understood.
zero. But
Understood. In that, yeah, please.
नहीं sir, sorry.
Yeah. So in that case only I was saying there is known as feeding the charity. Feeding the charity क्या होता है? Basically, you are doing a commercial activity, and the income that is left over, you are doing a charity. So
Okay.
before 2022, if you are
Mm-hmm.
doing a charity, okay,
Mm-hmm.
100 रुपए का income है, 70 रुपए खर्चा है, 30 रुपए doing for charity, then
Mm-hmm.
entire 30 rupees is exempt from taxation. Before
Mm-hmm.
2022, okay.
Okay.
Post 2022, there was a judgment of Supreme Court in New Noble, which
Mm-hmm.
says that feeding the charity, आप commercial activity कमा रहे हो, उससे आप charity कर रहे हो, this is
Mm-hmm.
something which is not allowed. So in your case, even though you are doing charity by earning from commercial receipt, that 30 rupees gets taxable, and you cannot take the benefit. You cannot say that that is I have spent it for the promotion of your weaker section of the society, and that is exempt. You cannot take that plea.
So, but the purpose of that commercial activity is so that ki that matlab that charity can be done. Matlab, because without donation you
Understood.
cannot exist, and donation getting donations is tough. So people want कि commercial activity ही create कर ले so that उसी से survive होते रहे and उसी से benefit भी दे पाए.
Understood. In that case, why don't you take a 12A registration for the trust? My
And not.
advice, take, yeah, please.
नहीं, sorry sir.
Yeah, my advice, go for 12A registration for the trust. Okay, in that case, you will fall under GPU, the seventh category. Okay, general public utility. When you fall under general public utility, you have to show that the receipt you are getting from selling that product, you are selling at a subsidized rate. Okay, if you are
Mm-hmm.
saying that you are selling at a subsidized rate, and the income, the net income that you are earning, you are using that for the development of the women, then your entire income gets exempt and you can take the benefit of 11 and 12. Now, the reason why your promoter doesn't want to go for 12 registration, I am not aware of, but an advice that go for 12 registration, you will fall
Okay.
under GPU. If you fall
Mm-hmm.
under GPU, you're selling at a commercial, at a subsidized rate. Again, you're selling at a subsidized rate, not at a
Mm-hmm.
market rate. If the market is 150 and you're selling at a subsidized rate of 100, okay, you will fall under GPU, and you spend that 30 rupees for the development movement, the entire 100 rupees or the entire 30 rupees gets exempt from taxation.
Okay. And so if they are selling it at market rate, so the 12A even after having a 12A registration, we cannot claim the benefit.
You cannot. You are not doing a charity. So even if you say that you are going under GPU, there is a particular proviso 20% wala, that you are
Okay.
doing a business. Total 20% ही होना चाहिए. If they exceeding 20% in your case, I understand that commercial receipt will exceed 20% of the total receipt. Yes, in
हाँ,
that case,
100% is the commercial
yes,
receipt हो जाएगा.
100% मेरा वही है. तो आपका GPU
हाँ.
भी हुआ नहीं, then it is not a charitable entity.
Okay.
Then your
Understood.
30% gets taxable. Even though you are using the 30 for the development of women, that 30 rupees gets taxable. It's sort of a CSR for them. राइट, इवन दो
Understood.
आप कंपटीशन बनाओ, 70 रुपये आपका इनकम हो गया, सर 70 रुपये
Mm-hmm.
खर्चा हुआ, 30 पे इनकम हुआ, 30 या CSR एक्सपेंडिचर. लेट्स टेक द एग्जांपल, व्हेन यू प्रिपेयर द कंपटीशन ऑफ इनकम, जीरो नेट इनकम, नेट प्रॉफिट जीरो प्लस CSR एक्सपेंडिचर व्हिच इज नॉट अ बिजनेस एक्सपेंडिचर, 30 gets taxable.
Okay. Understood, sir. Understood, sir. Okay. Thank you, sir.
Yeah.
Yeah.
Okay. Any more doubts? In the groups, I will share the details where you can connect with Manish ji. So if you have like some intense doubt, then maybe some more clarification is required. So in that case, you can connect. I will share the details. One doubt is there. A pure,
Yes, sir.
so a pure society engaged in pure religious activity can get 12 AB.
So Ghoshna, sorry, I can't answer this question because my experience of last 2 or 3 years of trust is entirely for your charitable entities. For religious part, I have not practically dealt with. So sorry, I can't answer that part of the question. But again, I will have a look, I will have a read, and I will connect with you on that.
Okay. Any more doubts anyone is having? No, I don't think so. Okay. So we'll wind up. Thank you so much, sir. Thank you so much. It was such a wonderful session, and so patiently you have taken all the doubts that the purpose of this class is fulfilled. That we have so many doubts, but we need an expert. So our purpose is that only, that there are many experts. So we are bringing them, and sir, really you have fulfilled the purpose of this class.
Thank you.
Thank you. Thank you so much.
Thank you, everyone.
Any more
Thank you, David.
doubts? Yes. Okay, then we'll wind up. Sir.
Thank you. Thank you, everyone.
Okay. Okay, sir. Thank you so much. Good night,
Thank you.
everyone, and
Good night.
we'll meet next week with more new sessions. Thank you. I'll give the connects in the groups. 1 second, sir. I raise a question in chat, Nidamji. 1 minute. You can unmute yourself, Nidamji.
Yes, sir. Yeah.
Yeah. Well, last doubt for today, please.
Yeah, written by wrongly filing Form 10B, Clause 37D and E, with amounts of corpus
No,
and.
I think the speaker have left.
I see. Okay, then we will.
Okay, I think actually I told to wind up, so saw the message
No
late.
problem.
Anyways,
No
okay,
problem.
you can connect. I will give the message. Those who have not joined the group, I'll share the details. Give me just
Yeah.
1 second. You can
Sure.
join, and there we are giving everything, right?
Okay.
Just
Thank
give
you.
me 1 second. 1 second.
Yeah.
I'm sharing the details in the group. In the in the chats, I have given the link, so you can join that group, and there we are, all the discussions and everything. Yes. Okay, we'll wind up. Everyone, thank you so much for joining. Thank you so much. We'll meet next week. Some feedback also you can give in the group also, so that those who have not joined, they can understand what's the level of classes we are doing and how much it helps to be in the live class rather than recordings. Okay. Thank you, everyone. Good night.